First, the uptrend continues, although we are not very keen to trade the indices. But what is turning around is the metal space. After 6-7 consecutive down days, Tata Steel has turned, and this is the sort of time you buy into a dead and beaten up sector. So that way, this is a buy with a stop of 520, target of 545. Z should show continuation. Z is a buy with a stop of 470, target of 492. And Titan is a buy with a stop of 918, target of 945.
Okay. Well, we have the other two experts with us in the studio. Mitesh, what are you buying at 10?
So I have a buy on ITC. I think we have seen a good rally in the FMCG lot, and ITC is just trying to catch up, getting past that level of 285. So keep a stop at 284.5. That's a very tight one, and look for targets close to about 295. And a sell call on L&T Finance. It's a conditional sell. It needs to break 129. In fact, today's low is very close to that. If it breaks that, go short with a stop at 132 for targets of 122.
Okay, well, the other stock actually that's doing the heavy lifting now is Infosys. It's up almost about 2% and if you pull up the contribution plate, 12 points out of the Nifty's 50-point gain is coming purely from Infosys. In fact, there was big delivery-based buying yesterday as well. Sandeep Wagle is also with us. Sandeep, at 650, how attractive does Infosys look? And what are the other stocks that you would trade now?
Good morning, Sonia. At 650, I would talk of a move towards 670, 675. That is all. I don't see it move much beyond that. My stocks would be a buy in a Z Entertainment, stop loss of 470, target 515, and a sell in a DHFL, stop loss of 212, target 180.
Okay, in fact, the IT move is.
Yeah, I just wanted to ask about Yes Bank actually. It's broken that support of 180. And looks like it's a fresh 52-week low, is it, for Yes Bank? Ashwini, does that open up a trade?
Okay, I don't think we have Ashwini.
No, yeah, he could. Yeah, go ahead, please.
The stock has not bottomed out. That's what you can say.
Okay.
But, at some point, all sorts of bad news, will be over. I think downgrades, now things are on the mend. Now, immediately the stock may not recover, but there are people who want to buy value, etc. That way, this may be the right stock, like Tata Steel is. But you have to understand that you'll have to take pain, maybe even below 170, 175. But overall, if you see right now, there are several PSU banks, several private banks, which are doing much better. So, forcing pain on yourself is not a bright idea. Maybe once the stock turns around, it won't run up in a hurry. And, if we go back above 200, that may be a better place to buy because you may see 150 before you see 200.
Oh, yes. And in fact, on this IT, because, we, refer to this move starting yesterday itself, it was beautifully poised. The index itself rallying from correcting back to 200-day moving average, and then rallying the Nifty IT index. That is, let's pull out that yesterday, and of course Infosys also, TCS also. Both these stocks yesterday bounced from the 200-day moving average. Now a couple of mid-cap IT stocks also joining in. Tata Elxsi, for example. Mitesh, any thoughts on this one, Tata Elxsi?
It was a buy recommendation yesterday, Anuj. I think I maintained the recommendation. Today is showing good follow-through. I think the first targets on the upside would be closer to about 1050, 55. And then we can even look at 1080 happening over here. So good trading bet for the next 2-3 days if you want to take a long trade.
Okay, well, the other pocket that's looking pretty good is the FMCG space. So Marico, Colgate, Dabur, all up about 15% for the month. ITC as well supporting the Nifty now.
Absolutely.
But let's thank our guests for joining us, the technical guest that is, and move on.
Yeah, I think it's a very important story that we have to watch out for because Essar Steel is approaching the NCLT at Ahmedabad. Various other creditors are also approaching. That is, Standard Chartered Bank is one of them. They're all approaching the NCLT against Arcelor's bid. So there is Essar itself, Essar Steel. So the Ruya brothers are asking to put their bid for their own plant, Essar Steel, as well, of course, Standard Chartered having another complaint against the committee of creditors. Our legal expert, Ashmit, is standing by to tell us whether the Binani judgment can be an important precedent that might help the Ruya family. Ashmit filed his report yesterday, but hear him out. He has all the details laid out.
Well, the battle for Essar Steel is far from over. From what we are picking up, what we understand, the Arcelor bid is pending approval at the hands of the NCLT Ahmedabad. But even as that approval is awaited, Essar Steel is rolling up its sleeve and getting ready for a fresh round of battle, rolling up its sleeve armed with the Binani judgment. Let's keep this in mind. The Apex Court very recently had come out with the Binani judgment, essentially upholding Ultratech's bid for Binani Cements. But in doing so, it had laid down two interesting principles. The first one is that maximization of value for creditors will be the guiding force behind the COC's decision on selection of a resolution applicant. The second is that no discrimination can take place amongst the financial and operational creditors, essentially saying that if one creditor is being paid 100%, there can be no rationale made for other creditors getting 50% or less. So essentially no discrimination. Now, that is where the first argument kicks in as far as maximization is concerned. Essar Steel counsels are likely to argue that look at this bid, look at these figures. Arcelor bid 42,000 crore rupees upfront, 8,000 crore rupees capital infusion. Essar's offer, however, stacks up to north of 54,000 crore rupees, hence arguing maximization of value for creditors. The second key point is, of course, no discrimination can take place between the financial creditors. Let's take a look at Stanchard's claims. Now, keep in mind that under the Arcelor bid, Stanchard has claimed an amount of 3,400 crore rupees. What they're getting essentially is just 60 crore rupees. This, Essar Steel counsels are likely to argue, is a case of discrimination, that it cannot be allowed, and that their bid will fully repay all the financial as well as operational creditors. This is the second key argument that they will be borrowing on. The third, of course, is the fulcrum of their entire argument, which is Section 12A. Now, Section 12A essentially provides for withdrawal of resolution proceedings. What it effectively does is that it provides for settlement of lenders' dues by the promoter entity, and hence, as a result of that, the IBC proceedings can be withdrawn. That, of course, is the letter and spirit. Can it be made applicable as far as this case is concerned? Well, it allows, Section 12A allows withdrawal only prior to advertisements inviting EOIs. Now, the EOIs, the advertisements went out in the month of March of 2018, but this amendment was brought in the month of June. And the SR's argument essentially is that it should be made retroactive, it should be applied retrospectively, because when the EOIs were sent out, when the EOIs were invited, there was no Section 12A. It came in only in the month of June. They will be seeking retrospective application. Now, of course, all of this is subject to the NCLT Ahmedabad nod. They will be facing, Arcelor bid will be facing opposition from a number of operational as well as financial creditors. Their pleas against the Arcelor bid are currently pending. They will be taken up tomorrow, and that's when, of course, it will be a showdown of sorts between the operational creditors on one hand, Arcelor's offer on the other hand, and, of course, Essar Steel, who've rolled up their sleeves and getting ready for a fresh round of battle. So clearly, all action tomorrow from NCLT Ahmedabad. Back to you.
Well, Ashmit is saying tomorrow, but this was filed yesterday, so that case comes up for hearing. Today, the creditors have maintained that unless they get an order from the Supreme Court, they are not going to entertain the Ruya bid, and that's because they believe Section 12A applies only prospectively. We'll have to see how things... The operational creditors challenge, which is Stanchard, could carry more weight, but we will have to wait and see whether the court respects the promoter's weight. It is a defaulting promoter, and if a defaulting promoter can come 18 months later or 2 years later and give the money, there is an argument that the bankers will make that if you had the money, why didn't you pay it when the case had not entered the IBC? So this could take the entire argument to another level altogether, and new precedents could be set. And it may not even stop at NCLT. In all probability, if the banks lose, they will take it to the Supreme Court. If Essar loses, then Essar will take it to first the NCLAT and then to the Supreme Court. So it does look like Essar's money or check is not getting written by Arcelor or anyone in this quarter, or so it seems.
Well, but, just an update on the market before we get our next corporate guest on board. Things are looking pretty good, Lata. Not just Infosys and IndusInd Bank, which are topping the charts now. Now there are some new additions to that list. The Bank Nifty itself is up about 0.4%. Kotak Mahindra Bank is also moving to the high point. HDFC has been playing its part. And as we said, if you look at the contribution plate, 12 points from Infosys and about 12 points from the HDFC twins. So these are the two behemoths supporting the market. Okay.
Yes, clearly IT is back in the reckoning. And as there is an India buy, you should expect an IT buy as well. Anuj has been pointing that out. Okay, let's shift to another theme that we have been discussing since yesterday. The Reserve Bank yesterday put out fresh numbers on credit growth in the economy, and they show that the credit growth, non-food credit growth, that means credit given to industry, is as high as 15.6% in the current year compared to around 7% in the same period last year. Let's take stock of the situation and see whether banks are more willing to lend. Rajkiran Rai, the Managing Director and CEO of Union Bank of India, joins us. Good morning, Mr. Rai. Always a pleasure having you with us. Are you getting the sense that bank loan growth is all set to be much faster in the second half?
Definitely, yes. Actually, the credit growth is shifting to the banking system again. So we look forward that the growth will be much better in the second half.
And have you bought any of the NBFC loans? We had the SBI Deputy Managing Director yesterday saying that they have bought about 5,000 crores of NBFC loans and they are in line to buy another 15,000 crore. What would your numbers be, if any?
I think I made an announcement that we are ready to buy about 5,000 crores of portfolio.
Okay.
So I think we'll achieve that number by this quarter end. And we are open to buy more if there is a good portfolio available.
Okay. Mr. Rai, good morning. I wanted to ask you a little bit about the stress in the real estate sector. What is your own exposure to the real estate sector? And we understand that banks have completely stopped lending to real estate companies. Not just that, they're also in high recovery mode, even if it means dragging these companies to the NCLT in order to recover under threat. What's your own view on that?
Actually, banks have slowed to real estate lending for the last 1 year after this stress actually. So whatever book we had on that NPA recognition is already over. So whatever portfolio we have is standard and absolutely there are no issues. And our exposure is more on the lease rental discounting rather than on the construction side to real estate. So I don't see any further problem to the bank on the real estate exposure. But then there is one more development happening, particularly on the lease rental discounting side. There are certain good accounts available which NBFCs are ready to move away from. And I think that is where the with the good capital availability, we can look at those assets because the pricing is very attractive.
Have you been told how much capital you will get and when?
No, not yet. Okay. We are watching media for that actually.
Yeah, we are told that by December 15th, the capitalization details will be announced and the money will actually be transferred. But you haven't been told, is it? Okay. Mr. Rai, if you can... Yeah, go ahead, sir.
Hello?
Yeah, any details on capital that the government told you?
No, not yet. Actually, that's what I said. Actually, the news for us is from the media only.
Okay. So, you tell us a little bit about what's happening with the agri exposure. I mean, the agri slippages last quarter was about 800 odd crores. Is there a risk of higher slippages now in the quarters to come?
Yes. No, actually, I think last quarter was a very high slippage on the agriculture side. I am not seeing that in this quarter. Maybe the recognition part there also is almost coming to an end.
Yeah, actually, your slippages had fallen drastically when you announced your Q2 numbers. What do you estimate Q3 will look like? I mean, 2/3 of the quarter is over. So, do you think that you will be able to maintain this falling pace of slippages?
Yes, yes. For the next 2 quarters, for Q3 and Q4, the numbers will be moderating further.
Okay. Actually, your loan growth in second quarter was pretty, non-existent. It was only 0.7%. Will Q3 be very different? Is there a number you can guess for the full year?
See, on the global book, actually, the growth looks very timid. But then if you look at the domestic credit growth, last quarter also it was around 9%. So we expect to maintain that level and with some capitalization which is likely to happen as per the reports. So I think the growth will be may move to double digits.
Okay, thank you. You said that some of these LDR lease rental loans are available from NBFCs at attractive rates. Should we expect an improvement in margins as you buy these kinds of loans?
Definitely, yes. Actually, we are already seeing that pricing power coming back to the banks in this quarter. So we should see improvement in the NIMs in this quarter and it will be more visible in the Q4.
Okay. What about your update on Essar? Are you likely to see the check getting written this quarter at all?
See, we are not factored in our projections this recovery for Q3. So I'm very sure the recovery will come either in Q3 or maximum by Q4. It may not go beyond that.
Okay. Just one final word. I mean, loan growth you spoke about briefly, but for the full year, what would you be targeting, not just for FY19, but what are the initial signs for FY20 as well?
The projection for this year is around 8%. That's the estimate. We are not revising that number as of now. But we see a lot of traction. It will depend on the capitalization and the growth capital we get, because already we have some cushion, because 0.625 of CCB is deferred by 1 year. I have some cushion to grow now. So, but then we will wait for the capitalization to happen, and after that we will decide on the numbers. But then there is a lot of potential, and we expect that the growth should be back in the system, particularly for the public sector banks.
Oh, very good. Mr. Rai, is there any area which is developing fresh trends of slippages? For instance, SMEs or MSMEs, because of the NBFC funding crunch?
No, these borrowers from MSME sector are different for the NBFC sector and the banking sector. I don't see there is an overlap. Our customers are different. But the MSME, the stress is there, and like that slippage we have factored in our projections, because there is one major area of slippage what we see. It is not from the large corporates which is coming, and it is more from the MSME. Yeah.
Okay, just one little detail which, I mean, you're not the treasurer, so you may not remember. What is your excess SLR, and therefore will you gain a lot if bond yields fall, mark-to-market gains?
Yeah, we are already sitting on some gains, because actually we have marked to market our AFS portfolio at 8.02 on 30th September.
Okay.
So yields around 7.70 means we are already sitting on some provision write backs.
Okay. And are you getting any recoveries this quarter from earlier either NCLT or recovery instances?
Yeah, actually in the month of October we saw one account where the payment happened, one major recovery happened. But then our like recovery numbers have substantially improved. We have seen in the last quarter the same trend is visible in this quarter also. Even without NCLT, the recovery numbers are improving substantially.
Okay, all the best, Mr. Rai. Thanks so much for joining us and giving us an update on that. That's the word coming in from Union Bank. But we need to get back to the markets, because things are looking pretty good. Up about 0.5% for the key indices, and the advanced decline ratio is very healthy. Let's get a snapshot of what's happening in the commodities space today. Manisha Gupta is here to give us more. Manisha, hi, morning.
Hi, thank you so much for that, Sonia. Some bit of a respite is what we are seeing in case of the crude oil prices, half a percent up for the international markets, and with what's rupees doing, we have seen nearly a percentage point of gains come in for the Indian space as well. There is just so much to watch out for in the global markets, and we have seen investors actually on sidelines ahead of these data as an event. It is going to be about the US weekly inventory data today in the evening, where the markets are anticipating yet another build-up in the crude stocks, but decline in the product inventories. And that perhaps has been supportive for the markets there. Apart from that, it also has to be about the OPEC meeting, which begins on 3rd of December. But the final statement in sense of output policy would only come in by 6th of December. So starting 2nd, 3rd December, markets will start preempting on what really can be accepted. So those 4-5 days actually would be quite volatile for the crude oil prices. As far as the monies are concerned, we have seen that being pulled out of the crude markets constantly. In the last 8 weeks, nearly 600 million contracts have been winded up on the long side, and nearly $12 billion rupees has been pulled out of the oil markets. So that impact is clearly to be seen, and 30% down in the crude oil prices majorly has been because of that. And of course, the sentiment change, where we have seen the supplies continue to increase. The US dollar index is yet another thing to watch out for, trading at 1.5-year highs, and that clearly has been putting pressure onto the markets. So gold and silver prices have continued to decline. 2-week lows actually in both of those precious metals is how we are trading in the global markets and the Indian space as well. It is about the base metal prices, which have seen a bit of a bargain buying come in on the lower side, especially for copper, where we will continue to hear on how the fundamentals are on the stronger side, because we have seen deficit in inventories for most part of this year, and that is how 2019 is expected to begin. So that is one metal where you are looking or hearing the most maximum kind of buy calls coming in from. For the other metals, it's more about bargain buying on the lower side. Remember, we have seen a constant decline and most of these metals are oversold. So some bit of a buying is what Shanghai has done. 0.5% up on LME is how we are trading, and the Indian markets clearly taking cues from that. But even with that, you have the zinc prices trading at 2-month lows, nickel at 13-month lows, not too far away from those kind of levels. It is in the energy space that we have strategies coming in from SMC Global today. On crude, they have an upside target of 3,730 for today. In case of natural gas as well, it is a buy with 310 is what they're watching out for the day.
Okay, so it's a buy strategy. All right, bye Manisha. Thank you very much for all that.
As promised, we're going to broaden the theme of the cash crunch situation to check its impact on consumption. Two gentlemen join in, B. Tyagarajan, the joint MD of Blue Star, and Nilesh Gupta, the managing partner of Vijay Sales. Gentlemen, thanks so much for joining us. Mr. Tyagarajan, I want to start with you. I'll ask you about demand in a bit, but before that, what percentage of Blue Star products are generally bought through financing, through the EMI route? And because of the NBFC, liquidity crisis, have you seen any impact on demand at all?
Good morning. It's a pleasure to talk to you. There has been no impact of NBFC so far witnessed in the consumer durables category at all. Our annual average is around 30% of our sales happen through consumer finance. In the peak season, it touches even 42%. During the festival season, I have seen no dip in the demand through consumer finance, and all the consumer finance companies are able to finance this adequately.
Okay. Good morning, Mr. Tyagarajan. Can you give us an idea of sales growth itself? It had been rocked by weather in the first half. What was the first half tally, and what do you expect in the second half in terms of volume growth?
Good morning, Lata. It was indeed true that apart from summer, there were many other headwinds like the commodity price increase, the rupee depreciation. These things also impacted H1. But fortunately, from September onwards, we are seeing good traction in the market. The consumption story continues. In the festival season is yet to end because the Christmas New Year is yet to happen. So far, compared with last year, I have seen around 15% growth for Blue Star. That's the period between September and now in terms of revenue. The profit margins are hit by around 0.5 to 1% as of now. I think with the rupee strengthening, that should get moderated for the full year. My full year outlook, I maintain the same, that the market should at least grow by 5%, and we are targeting around 15% growth in terms of revenue.
Okay, so 15% revenue growth and 5% growth for the market on the whole. That's the full year target. We have Nilesh Gupta, the managing partner of Vijay Sales, who also joins in. Nilesh, Mr. Tyagarajan is telling us that, because of the stress in the NBFC space and the financing space, there's been no real impact on demand. But what about you? What percentage of Vijay Sales customers generally buy through financing, and has there been any hit in demand?
Good morning, everybody. Basically, we see 40% of the consumers who buys on financing through NBFC, that is paper finance, and there's another 25 to 30% of the finances which happens through credit card EMIs. And as far as the issue of the NBFC lending is concerned, I think the major player in this is Bajaj Finance, and that has not got affected at all, neither any of the other players. So we did not, in the consumer durable segment, we have not seen any letdown, or even these finance companies coming back to us and saying there's a liquidity crunch, so we'll have to go slow. On the contrary, even post Diwali, they have been very aggressive okay, what can we do to increase the numbers?
Oh, that's good to hear. And have the numbers increased? I mean, there could be a problem of cost of money. The interest rates have moved up. How much have they moved up, you think? And is that impacting demand?
See, normally for the consumer, it's a 0% finance. He's not paying any interest as such, except for the little processing fees which he pays. So what happens is, on that side, the demand will not change, because there's no change in the structure of the finance to the consumer. As far as with the brands and the retailers is concerned, they always have an annual tie-up. So there's no change as such from the financing point of view, as far as interest rates are concerned.
Okay, then more generally, Nilesh, what has been the demand scenario in the festival season and generally in third quarter?
See, in the festival season, what we saw is we saw approximately a growth of around 7 to 8%, although we were expecting a growth of 12 to 15%. But we also have to understand during the festive season, the oil prices had gone up, dollar had gone up, so the rupee had devalued. And there was not much of a something. In fact, on the contrary, the companies did hold on to the price, did not raise the price. So it at least gave us a growth of 7 to 8%. And now the best part is, as Mr. Tyagarajan has said, the season is not over. We have the Christmas and the New Year coming up. And the best part is rupee has strengthened. Now it's back from 74 is back to nearly 70 rupees. So at least there won't be any price hikes which were expected. Most probably it would not happen. And so I expect a reasonably good demand. And to give you into perspective, last week we did a Black Friday sale and we were not very sure how it will perform, because it was just after the Diwali. But to our surprise, in the panel category, on that 3 days, the weekend, we grew nearly 2.5 times, which we would have done on a normal day. Wow. So that means the consumption story is still there, and it's going to grow only with passage of time.
Yeah, but you know, I mean, if you map the last 5-6 years between 2012 and 2018, the consumer durable space in India has registered about a 10-15% growth on an average. Now you're speaking about a 7 to 8% growth just in this festive season. Is this a new normal, high single-digit growth that we may have to live with for the next year or so, Nilesh?
Yes, I think it can be the new normal. The only change which can happen, and we can go back again to a 10 to 15% growth, is if some industry change happens in terms of a product category, or some price revaluation happens, which currently doesn't seem to be on the cards.
Okay, then let's ask the consumer maker himself. Which way can the price go, Mr. Tyagarajan? Because of the rupee appreciation, will you drop the prices? You have a little more elbow room?
I will be candid. We increased the prices by around 5%. Large power retailers like Vijay Sales, they're depending on their volume, actually the price increase wouldn't have taken place. Okay. On an all India average price increase which we could realize during festival season so far is around 2%. Okay. If the commodity prices are becoming friendly and if the rupee is strengthening, I think we will not be increasing the prices further.
Okay. And what would your own projections be? I mean, you spoke about this year, about 5% growth for the industry. You're also talking about single-digit growth. Over the next few years, will it continue to be, or at least the next 1 year, 1 to 2 years, will it continue to be in single digits, you think, the growth in the consumer durable space?
My prediction is the market is going to explode as far as consumer durables are concerned, because you are seeing many Chinese players making huge investments here. I think it will be good for the industry. Okay. There will be a massive growth. Our penetrations levels are negligible. Room air conditioners itself is going to explode like anything.
Okay, well, that will be good news for Nilesh as well, who's listening. But Mr. Tyagarajan, one final question. An analyst was pointing out that some restraint in AC buying is also because power costs have gone up. And, you know, in a lot of tier 2 cities, another 1,000 rupees in terms of an AC bill, a power bill because of AC, could become prohibitive. Is that proving to be a roadblock for higher sales?
Not at all. There are quite a bit of articles being written about this. Some are saying this will be a very big deterrent. So, for example, in year 2000, if you have bought a AC, and if you are buying a 5-star inverter AC now, it consumes just 90% saving, 10% of the power it consumed in year 2000. Actually, the industry has achieved 90% saving over the 18-year period. And 1st January 2020, there is going to be another table change. So there, second thing you look at it, there is long queues for buying smartphones, and smartphones are consumed 2 or 3 per home once in 2 years. And the smartphone bill and the air conditioner bill will remain the same.
Oh. It's tempting then to change your old ACs to new ones after 2020, I guess. Thank you very much, Mr. Tyagarajan and Nilesh Gupta, for joining us and telling us
Or in other words, smartphones are our competitors.
Okay. Well, in a way, one leads to global warming, and you are the antidote, hopefully, for the consumer. Thank you very much, Nilesh and Mr. Tyagarajan, for joining us. The positive news is that actually consumption is fairly steady. Though the new normal may be a high single digit, it still has been very good in the third quarter. That's the word coming in from Vijay Seth. Now the heart will beat for the heart of India, Madhya Pradesh. It votes today, and we have our in-house expert from Network 18, Pallavi Ghosh, joining us. She's been covering it very closely. Good morning, Pallavi. Tell us, which way will Madhya Pradesh tilt?
Yes, morning. It's going to be a tough one, certainly for Shivraj Singh Chauhan, because this is the 4th term he's going in for. And when I travel in Madhya Pradesh, what I did notice, Lata, were 2 things. One, of course, the farmers' distress. Now, that is something which is not overestimated. It is actually there on the ground. And the second, of course, is the youth. The youth of Madhya Pradesh are very aspirational, just as they are anywhere else. And they are not infused by ideas like name changing or Ram Mandir. So there are non-issues for them. And getting jobs, infrastructure, facilities, that's certainly a huge problem in Madhya Pradesh. Now, if Shivraj Singh Chauhan is once again able to convey to people that, give me a 4th term and I'm going to change things, then of course there's nothing for him to worry about. But this is exactly what the Congress party is capitalizing on. I mean, we know Kamal Nath as a commerce minister. We've seen Jyotiraditta Scindia. They're trying to portray themselves as the face of change. Someone who can bring that change, someone who can provide those job opportunities, which is why Rahul Gandhi, even today, till today, he's been making a statement that when you vote for a change in Madhya Pradesh, what you're going to vote for is more jobs, more opportunities, and a way out for the farmers' distress.
Okay, Pallavi, hi, morning. You spoke about farmer distress and the youth as well. What about corruption? Because there is a broad narrative that some part of the BJP government in Madhya Pradesh has been infiltrated, by corrupt officials, etc. Anything on that front that could hurt the BJP?
Well, the problem is that if the whole idea of, the Yapam scam and, the corruption, the Shivraj Singh Chauhan government, that kind of argument is coming in from the Congress, then it doesn't really gel, because Congress is also fighting a perception battle. It's like the pot calling the kettle black. So, every time Rahul Gandhi raises an issue of Rafale, there are people who are throw back the 2G scam and several other scams. So on the ground, that's not sticking so much. Frankly speaking, in my years of covering of elections, corruption hasn't always been an issue. It's when it's coupled up with other factors, that's when it becomes an issue. So the Congress party is sidelining it. Yes, it talks about the fact that the Mamaji is not clean, but I think the main focus is going to be whether there are going to be better job opportunities, whether there are going to be farmers who are going to be given better stocks, and how convinced the people are.
Give us your tilt. I mean, what do you see? We won't hold you to it, but what do you think, which way is the wind blowing?
But the fact is that the biggest problem with the Congress party is that at the end of the day, what really matters for any party to win is if your booth workers reach the booth. If they're able to get your voters, your supporters to come to the booth and vote for you, that's where the Congress party has often lost out, and that's where, the BJP really scores. And we've often been proved wrong, but I would still say that it's neck on neck.
Okay.
I wouldn't be surprised if the result goes either which way.
Okay. And finally, Pallavi, do you get a sense that people will vote differently in the Lok Sabha, and therefore we shouldn't extrapolate this one?
Yes, I mean, it usually happens. But you know what happens is that this is so close to the Lok Sabha elections. Should the Congress party do well in at least 2 to 3 states, you know, it builds up a perception. It builds up a perception that Congress is very much back in the reckoning. And the second thing is, you know, it's going to help its positioning as far as the other opposition parties are concerned. So, you know, it will certainly be used as a referendum or a litmus test for either side.
Okay, Pallavi, we'll have to leave it at that. Out of time, but I think we're going to touch base with you at several points through the day. Thank you very much for joining us. We are wrapping up Bazaar on the note that the heavyweights are doing very well. Mid-caps in trouble, so ideas on both sides, bulls and bears on Chartbusters in just a minute.